One of the biggest causes of economic crisis is asset bubbles. So how do asset bubbles cause crisis? It's not terribly difficult to understand how they cause the problem, but it is hard to see the problem given modern economic thought in theory. Okay, investor A purchases a property for $1 million, but he doesn't have the money up front, he has to borrow it. So he takes a loan of $1 million plus paying an interest of $100,000. As for profit, he adds an additional $100,000. This adds up to a sale price of $1.2 million. Investor B purchases the property for that $1.2 million. He again has to borrow money to purchase it. He is also required to pay interest on the loan of $120,000. His profit, for the sake of argument, is also $100,000. Thus, the sale price of the property is $1,420,000. Investor C notices that the property is increasing in value and wants to get in on it. He takes a loan of $1.42 million. His interest payment is $142,000. His sale price with a profit ends up as $1,662,000. From this, we can see how the prices of assets can expand well beyond their value when they were originally created. Typically, this happens with real estate because it is assumed that prices will not decrease by any significant amount. There are, however, two notable exceptions to this trend. This is an ever-expanding asset inflation that continues until some investor thinks it's too much and refuses to buy. What happens is, a decreased demand lowers the price of the asset. The asset's price is determined by whatever the market will pay for it. If the market won't pay anything, then its price crashes. The unlucky investor D is left holding the now toxic asset. It's called toxic because he can't sell it because its price crashed. He is unable to pay his loan of $1.662 million. The result is the bank not getting its loan of $1.662 million back. They can seize the asset, but it's not worth much. Now they're stuck with the toxic asset. This asset bubble has been growing since the 1980s, when President Ronald Reagan carried out a deregulation of the financial industry. It was compounded even further by the regulations removed by President George W. Bush. So, why is it that modern bourgeois economics can't see this problem? Long story short, it believes that this increasing asset price is a real increase in value. This is considered part of the real economy, just as physical commodity production is. It is not the same. Physical commodity production is the investment into means of production and workers' wages. It is an expanding of the economy and the value therein. Merely increasing the cost of an already existing asset does not create new value, but on paper, in bourgeois economics, it does. The question must be asked now. Why would banks do this? Why keep going along with the increase in price? Because the higher the price a property is, the more money they will make on the loan for it. As long as the debt remains unpaid or is seized upon default, the bank owns the asset worth that dollar amount. On their balance sheets, they're getting richer. This increase allows them to make more loans because they have more in their reserves. They recycle the same assets over and over again with the purpose of inflating its price to claim they've made a profit. On paper, in bourgeois economics, they have. The problem is that society's debts and their ability to pay them grow independently of each other, eventually leading to an economic crisis. Thank you for watching. Won't you go ahead, rate, comment, subscribe, and share on various social media. And if you want, you can head over to my Patreon page and show your support. Or you could head over to the MRN bookstore and check out some of the latest books available.